Hey everyone, welcome back to the channel. I'm Paula. If you've been following this channel for a while, you'll know that I spend far more time looking at what's happening in the wider economy than I do staring at 5-minute crypto charts. Because whether we like it or not, crypto doesn't exist in its own little bubble anymore. It reacts to interest rates, global politics, institutional money, and investor confidence, just like every other major asset. And that's why I wanted to make today's video. Today, America celebrates 250 years of independence. It's a huge symbolic moment, and President Trump has been using the occasion to talk about what he calls America's golden age. Whether you agree with his politics or not isn't really what interests me. What interests me is the timing. Because over the past couple of weeks, something has changed across financial markets. Bitcoin's recovered well from the volatility we saw during the Iran conflict. US stock markets remain close to record highs. Oil prices have settled back after fears of supply disruption eased. Investors are beginning to talk less about recession and more about growth again. So it got me thinking, are we simply seeing a bit of patriotic optimism around today's celebrations? Or is confidence quietly returning to global markets? Because if confidence is returning, that matters far more than today's headlines. One thing I've learned over the years is that markets don't just move on numbers, they move on stories. Think back over the last 20 years. There was the dot-com boom, then the housing boom. After COVID, the story became stimulus and easy money. More recently, it's been artificial intelligence. Investors aren't just buying today's earnings, they're buying tomorrow's story. And now we're hearing phrases like golden age, American manufacturing, bringing jobs home, and making America the crypto capital of the world. Whether every promise comes true almost isn't the point. If enough investors believe the story, money starts moving long before the economic data catches up. That doesn't mean we ignore the facts though, because there are genuine reasons why markets feel calmer today than they did just a few weeks ago. Let's start with oil. During the height of the Iran conflict, oil prices briefly surged above $120 a barrel as traders worried that the Strait of Hormuz could be disrupted. That's one of the most important shipping routes in the world, so any threat there immediately raises concerns about inflation and economic growth. Fast forward to today, and Brent crude is back around the low $70. Shipping concerns have eased, diplomacy has continued, and those worst case scenarios simply haven't materialised. So, why does that matter for crypto? Because cheaper oil reduces inflationary pressure across the economy. Lower transport costs, lower manufacturing costs, and lower energy prices all make it easier for inflation to continue moving in the right direction. Markets don't need everything to be perfect, they just need things to become a little less bad. And that's exactly what we've seen. The conversation has also shifted around the Federal Reserve. The Fed hasn't suddenly started cutting interest rates, and inflation is still above its long term target. But investors are increasingly debating when financial conditions might begin easing rather than worrying about endless rate hikes. That's an important psychological shift. Markets are always trying to look 6 to 12 months into the future. They're not buying today's economy. They're buying the economy that they think we're going to have next year. Something else I think that's worth talking about is the bond market. Now, I know bonds aren't the most exciting subject in the world, but they're incredibly important because they're often one of the first places professional investors look for clues about inflation, growth, and interest rates. If bond yields begin falling because investors believe inflation is coming under control, that can create a much friendlier environment for risk assets like tech stocks and crypto. This is one of the reasons I always say that crypto investors should pay attention to macro. Sometimes Bitcoin isn't moving because of Bitcoin at all. It's reacting to the same forces moving every other major financial market. And I think that's one of the biggest changes we've seen over the last 5 years. Crypto's grown up. Back in 2021, it often felt like its own separate universe. Today, we have Bitcoin ETFs, BlackRock, Fidelity, pension funds, governments writing crypto legislation, stablecoins becoming part of payment systems, banks experimenting with tokenization, and institutions building digital asset infrastructure. Crypto is increasingly becoming another part of the global financial system. That means when confidence returns to markets, crypto benefits alongside tech stocks and other risk assets. When confidence disappears, crypto often falls alongside them as well. Personally, I think that's a sign that the industry is maturing. Now, does that mean we're entering a huge bull market? Not necessarily. I always try and be careful after one good week. One green candle doesn't suddenly solve inflation. Government debt is still enormous. Interest rates are still relatively high. And geopolitical tensions haven't disappeared. There are still plenty of risks that could change sentiment very quickly. But I do think the conversation's changed. A few weeks ago, investors were asking how bad things could get. Today, they're asking whether the worst might already be behind us. That's a very different mindset. And markets care about changes in direction much more than they care about absolute numbers. The other thing I'm watching very closely is where institutional money is flowing. ETF inflows remain important, stablecoin growth remains important, liquidity remains important. Those are the things I think will tell us much more about where crypto's heading than whether Bitcoin is up or down on a particular day. Because increasingly, crypto isn't following crypto anymore. It's following liquidity, confidence, and the global economy. So perhaps today's celebrations are simply that, a celebration. Or perhaps they represent something a little bigger, a shift in sentiment, a reminder that optimism itself can become an economic force. We'll only know that with hindsight. But I do think it's fascinating to watch how narratives influence markets and how quickly money starts moving when investors begin believing the future could look brighter than the past. I'd love to know what you think. Do you think confidence is genuinely returning to markets? Or do you think this is simply another short term rally before volatility returns? And before you go, if you've been thinking about automating your trading, Milkshake Matty and I have put together a completely free 30-minute TradeBot Pro course. It takes you from beginner to having signal bots connected to your exchange in around half an hour. It also includes a free 14-day trial, so if you'd like to learn more, you'll find the link in the description below. If you enjoyed today's video, don't forget to like, subscribe. Thank you so much for watching, and I'll see you in the next one.